Good day, friends. Welcome back to IC38 exam preparation modules. We are in chapter 7 now, and I am sure each one of you are giving your best to upgrade yourself in the basics of this financial services business. Right, so let's keep focusing on the examination learning as well. So, currently, into seventh chapter, which speaks about life insurance documentation. Life insurance as an industry runs more on the documentation submitted. So the point is simple. Let me add a little bit more for easier understanding. There is a life insurance company who are providing required protection or investments to end user who is a customer, and life insurance company individually does not meet the customer face to face. Rather, it is the advisor or a consultant in between who plays the bridge, right? So the bridge should ensure that right documentation is collected from the customer and it is reaching the life insurance company for the policy to be issued. Let me emphasize, life in understanding life insurance documentation is very important, because that impacts the death claim in case if there is any uncertainty happening for the customer. With that little introduction, let's move into the chapter life insurance documentation. I am again repeating, I trust you have seen all the 6 chapters prior to starting life insurance documentation, along with the videos on sample questions, which will help you to focus for the examination, right? So let's move into chapter 7, life insurance documentation. In this chapter, we are going to see in 3 basic concepts of documentation. Let me put it in this way: we have to understand documentation at various stages, and for every stage, there is a difference of documentation as well. So, at proposal stage, documentation is different, policy stage, and the policy conditions and privileges based on which documentation might differ. Right. So, moving forward, let's understand documentation at proposal stage. The first and foremost document which you would share with the customer, or which you should understand, is the prospectus. So prospectus is either in the physical printed form or in electronic form nowadays, and this gives the details about the product which you are briefing with the customer. So some points which will definitely be existing in the prospectus includes a unique identification number, scope of benefits, extent of insurance cover given, warranties, exclusions, exceptions and conditions, and description of contingency and coverage. So a prospect will clearly share all these points to the customer so that he can make a informed decision before starting his life insurance policy. And in addition to the detail points mentioned, there will be details about riders and what are the benefits and who's eligible. All those details are part of the prospectus. So moving forward, proposal form is the second document which we have to understand. In proposal form, we'll be mentioning about details of family members, their health details as well, which will help the insurer to underwrite the policy. The second document we are going to discuss is the proposal form. That is what we saw, and we saw that family details will be recorded in the proposal form, and other details pertaining to the policy holder will also be recorded in the proposal form. So the trustworthy message to be shared by the agent and the customer in the proposal form is more important here, and all the details filled should be truthfully done. This is what section 45 speaks about. Adding more about proposal form, nomination should be given in a proposal form by the policy holder, and section 39 of the act is what emphasizes on nomination. So life insurers collect all the documentary evidence to verify and then assess the risk profile of the customer before issuing the policy, and that is done through proposal form. Life insurers look into the following documents. For instance, an agent confidential report which comes along with proposal form, a medical examiner report comes along with the proposal form, and the moral hazard report. So let's understand more about these three reports. Agent confidential report is given by the agent about the policy holder, and he assures that all facts and figures have been shared in the proposal form. Medical examiner report, in certain cases the doctor examines the policy holder and gives a report as well, considering the physical features like height, weight, and the health conditions like what is the blood pressure, cardiac status, diabetes status, etc. Right. So let's also understand what is moral hazard report. This is a very simple condition which has to be fulfilled, right? And this makes the fundamental of the contract as well. Nobody should be making profit on somebody's death, or nobody should be making profit or his own death. So taking that into consideration, moral hazard declaration is done by the policy holder to the insurance company to ensure that the details given are clear. So let's move on to policy stage documentation. The first document which comes in this stage is the first premium receipt. An insurance contract commences the moment the insurer gives the first premium receipt. So this is an acknowledgement as a collection of premium from the customer into the insurance company. The second one is the renewal premium receipt. This is issued on subsequent yearly premiums. This is a proof for the customer that he has made the premium deposit in the life insurance company. So let's understand more about the first premium receipt and what all it holds. When you see the first premium receipt, these are all the contents in the first premium receipt, which includes name and address, date of maturity, next due date, date of payment of last premium, policy number, premium amount paid, sum assured, date of commencement of risk, method and frequency of payment. So these are all the information which is part of the first premium receipt. We are moving into policy document now, and we are understanding documentation at the policy stage. Policy document is an evidence of the contract between the insured and the insurer. Insured is the customer, insurer is the life insurance company, right? So the insurance company will issue a duplicate policy in case the originally issued policy document is lost. So most important point to be noted is policy document is very critical for the policy holder to have with him and to brief his nominee, so that in case there is a maturity claim to be done by the policy holder or the death claim to be done by the nominee, policy document becomes the first evidence of the contract. So what are all the policy document contains? Policy document contains standard provisions, what is the policy schedule, and specific policy provisions if any. Right, so let's understand more about this policy schedule. First part of document is the policy schedule. It is the first page in the policy document and forms the heart of the insurance contract. I am repeating, friends, you can see the policy schedule, you can read the policy schedule as heart of the insurance contract. Right, so policy schedule contains name of insurer, few common details similar to the first premium receipt, insurer's promise to pay back, signature of the authorized person of the life insurance company along with the stamp and the address of the local ombudsman. Right, so the second part which you have to understand in the policy document is about the standard provision. This relates to age proof, what is the grace period in that policy, the rights and privileges of the customer. Third part in the policy document will be specific policy provisions. It is completely based on the details shared by the policy holder. If there are any provisions to be added, the life insurer mentions that in the policy document and shared to the customer for his understanding. Right. So let's move forward now from initial documentation stage to the policy documentation stage. Now let's understand policy conditions and privileges. So what are all the privileges as a customer he is eligible for? The first one you should know is a grace period. The policy has to stay in force for either claiming the maturity benefit or the nominee claiming the death benefit. So for the policy to stay in force, a regular premium has to be paid. On non-payment of premium, the policy will lapse. We have seen about this earlier. Right. So what is this grace period? After the due date of the policy, there are certain number of days, usually 30 days, given by the life insurer to the customer to make the payment. So that is grace period for you. All the benefits are similar in the grace period as well, right? So in case death happens during the grace period, the policy will be eligible for a claim, right? So it is simple to put it in this way. Grace period is nothing but an additional period of time given by the insurer to the policy holder. Continuing on the grace period, emphasizing the fact the insurer deducts the premium from the death benefit if the death of the policy holder happens during the grace period. Let me put it in this way. The policy holder dies during the grace period, the nominee can avail the death claim as well. This is an emphasizing on the important aspect, right? So you should know about lapse and reinstatement now. The policy will come to a lapse condition if the premium is not paid. Then the policy has to be reinstated or revived after paying the premium. Once the policy comes into in force status only, the policy is eligible for all the benefits including death benefit, right? So moving forward, as per IRDA regulations, a non-linked policy can be revived within 5 years from the date of the unpaid premium, wherein a linked policy can be revived within 3 years. More about lapse and reinstatement, right? So revival of application within specific time needs to be noted, and payment of overdue premiums happens with a interest, right? So and when the revival comes in, satisfactory evidence to be given to the insurer for the policy to be continued, and importantly, increase in payment or decrease in risk cover as per the terms. Ideally, as a financial consultant, you should be advising your customers to continue the policy and avoid lapsation to enjoy the benefits of the policy. Right. So the company may require a medical examination for reinstatement at some point. So this can happen if the reinstatement time taken from the lapsed time is a little longer, then the company may ask for a medical examination. So to be very precise, if the policy is in a lapsed condition for nearly a year or more, then this medical examination might be triggered, or if there is a reason to suspect on the health condition of the policy holder. Right. So let us move now more understanding about the policy conditions and privileges. We are in understanding policy conditions and privileges. So let's see what is non-forfeiture provisions. The Insurance Act 1938, Section 113, protects policies from lapsation to the extent of paid up sum assured. So what is this? There is a surrender value which is available for all the policies, so for a premature exit. So if a customer does not surrender the policy, and if the customer does not pay, there is a probability of policy getting into a paid up status, provided certain number of years premium are paid. Right. So there is a chart available with all the life insurers to understand what is the surrender value and what is the paid up value. Right. So to add more, surrender value gives a cash value to a customer in a premature state, but let us be very clear, right? Surrendering a life insurance policy is not the most ideal scenario, because the customer will lose the protection value and he may also lose the benefits of the policy to certain extent, right? So in non-forfeiture provisions, we saw surrender value, we saw paid up value, and now there is a guaranteed surrender value. As per IRDA guidelines revised in 2019, right, a GSV, guaranteed surrender value, is payable if all premiums have been paid for at least 2 consecutive years. So that this is a new regulation which came into force from 2019. 19. So every product taken by a policy holder, if he has paid for 2 years, from the third year there is a guaranteed surrender value. I am again repeating, most ideal scenario is the customer paying the premium for entire term of the policy. So the GSV, a little bit more on the GSV, the value depends on the duration of the premium paid, and the GSV is required to be mentioned in the policy document. Right. So let's understand policy loans. It completely depends on the surrender value of the policy. Right. Let's understand on the policy loans. It completely depends on the surrender value of the policy, and the customer can avail a loan against the policy he has taken and where he is paying the premium regularly. Right. So policy loans usually are 90% of the surrender value, and there is a minimal interest charged for the policy loans taken. So it is a typical arrangement between the life insurer and the customer. Customer can avail a loan on the policy he has taken, and till the time he is repaying the loan, he has to keep paying the interest on the loan. For policy loans, definitely there is a nomination given, right, to ensure that in case of a death claim arises, there is no ambiguity during the claim settlement period. We are continuing with policy conditions and privileges. Now let's understand special provisions and endorsements, and the first one is nomination. So under section 39 of the Insurance Act of 1938, the policy holder may nominate the person to whom the money secured by the policy shall be paid on his or her death. So nomination is most essential in all the life insurance policies, and he can nominate one or more person as nominees. A simple example, if somebody has 2 children and he wants to nominate both the children as nominees with 50% benefit each, it can be done. Right. So nominees can be changed any time during the term of the policy, and while the policy is getting matured, if the policy holder is alive, there is no impact of nomination, but the policy holder continues to get the benefit. Right. So nomination may be incorporated in the text of the policy itself or by an endorsement separately after taking the policy. If the nominee is a minor, the role of an appointee comes into force, and the appointee should be the age of 18 and above. Right. So if no appointee is given for a minor claim, for a minor nominee, then the claim is paid to the legal heirs of the policy holder. So if more than one nominee is appointed, the death claim will be payable to them jointly as discussed earlier. A little bit more on a nomination, a bit of sum up over here. You can see provisions of section 39 which speaks about nomination. So when can nomination be made? The nomination shall be done by endorsement. Addition, change or cancellation of nomination is possible. Assignment cancels nomination. Death of the nominees will impact the policy holder to change the nominee. Policy money payment to surviving nominees. And lastly, nomination not applicable to section 6 of MWP Act. If you want to know more about MWP Act, please do refer to previous chapters where we have discussed in detail about the MWP Act. We are continuing with the special provisions and endorsement. Assignment is the next stage of nomination. Once you assign a policy, it transfers the rights to the person to whom we have assigned. Assigner, person who transfers the right. Assignee, person to whom the property is transferred. Nomination is cancelled. Now assignment takes over the nomination status. Right. So 2 types of assignment: conditional and absolute. What is conditional assignment? Policy reverts back to the life assured on death of the assignee, whereas absolute, no reversion possible. It is given to the person to whom it is assigned. Right. So assignment can be done wholly or partially. A typical example can be somebody has taken a loan, and to the extent of the loan he can assign the policy to that person. right? So assignment must be signed by both the transferor or assigner and duly authorized agent, attested by at least one witness. Right. Assignment comes under section 38(2), and 38(2) specifies that an insurer may accept the assignment or decline the same for certain reasons. So the transfer of title has to be specifically set forth in the form of an endorsement to complete the assignment. Right. So assignment, however, the insurer shall record the reasons for such refusal in case if he is refusing for assignment within 30 days of submission of the assignment notice. And there should be conditions for valid assignment, right? And it should not be against the law in force. An assignee can do another assignment but cannot do nomination because assignee is not the life assured. Right. A little bit summing up here about assignment provisions of section 39. First, nomination not applicable to section 6 of MWP Act. When can assignment and nomination be done? Nomination shall be by endorsement. We can keep changing, cancelling, adding nomination. Assignment cancels nomination. Most important point which we spoke about, assignment and death of nominees or assignees, and how it can be changed, and policy money moves to surviving nominees. We will continue to learn more about policy conditions and privileges. Commonly extended privileges to the policy holder includes duplicate policy, alteration in policy terms and conditions, and alteration in basic information. And main types of permitted alteration includes change in certain classes of insurance or term, reduction in sum assured, change in premium payment mode, and change in the date of commencement. In certain policies, splitting up of policies are available, and removal of an extra premium in future after issuance in the initial stage, change from without profits to with profit plan, correction in name, settlement option for payment of claim, and grant of double accident benefit. So multiple changes possible as a privilege to policy holder. And with that understanding of privileges, we come to an end of this chapter, an interesting chapter which spoke about life insurance documentation. That comes to with that we come to end of chapter 7. Continue watching sample questions in Q&A video for chapter 7, and do refer the question bank available videos. Right, so let's continue with the chapter 8 and 9 available to complete the life insurance segment in IC 38, post which you can continue watching the videos on the health insurance segment. Right, so good luck, all the best, and happy learning.